So guys, this is sort of nice because as it turns out, we were sitting here in the same place, although I guess by that screen, 4 years ago, although it now seems like 400 years ago. So thank you for coming again to one of these. I was looking back at our interviews just thinking, oh, what could I, what were we talking about then? And one of the things that I was concerned about, and you were not concerned about either one of you, was SoftBank. It was sort of like all people could think about at the time. It was writing these massive checks. Obviously, it's kind of not fallen off a cliff. That's overstating it, but it's retrenched dramatically. I'm just wondering, looking back, what do you think the impact of SoftBank was on the venture industry? Because it really does still feel to me like they started what only stopped in the spring of last year. What do you think?
Well, I mean, I think we're coming off 3-4 years of just incredible amounts of capital going into venture, more than's ever come in before. And that's not just SoftBank. That's a lot of folks who've had growth funds, crossover funds. And that flooding of capital has done a few things. One is it's created a lot of big companies, but some of those companies have been overfunded. And some of those companies have had a lot of time to exist and now have to kind of rationalize what happens to them. So, our approach when we were here 4 years ago was to really sort of go back to the basics of venture and focus on early stage primarily. Like we kind of took a very contrarian view relative to other firms at the time, where we said, hey, we're just going to have a venture fund. We're going to have a very small team. Today, we're excited. We have 10 folks on the investment team, 7 partners. A bunch of them have been promoted from within, which is something that we care deeply about. We've also brought in folks from the outside. And we think that venture is a craft. It's a bit of an art. It's an apprenticeship-based business. Somebody mentioned Pierre Lamond. I used to apprentice with Pierre Lamond, my first time in venture. And so we sort of thought of this as a much more boutique business than some of these larger, more scaled players. And in many ways, I think we're happy we made that choice because we've been able to back amazing founders and build a team. And we've obviously built more funds. So we have a venture fund and a growth fund, but we take a very different view on that vehicle than just scaled growth capital.
Well, it is interesting because your firm is quite a bit bigger than when we sat down a few years ago. I mean, so you were walking into a situation at Kleiner where it had really become very sprawling, and you kind of pared it back, and now you're rebuilding. I'm wondering what is the right size, because now I saw you have investors and specialists and advisors from the old guard, Bing Gordon and John Doerr, et cetera.
Yeah, I think we might actually be smaller than we last met here over there.
Oh, is that right?
Yeah, I think our total headcount at the firm is in the low 50s.
Okay.
Yeah, so the investment team is, as Ilya mentioned, 10 folks, and we have specialists that do talent, marketing and comms. We have a few of our colleagues here today. We have a few folks who specialize in go-to-market. But yeah, I think going back to Ilya's point, it was all about going back to the core, which is early stage venture capital. And what do you need? You need to have investors who are sort of, we call them full stack, who are technologists, operators who've built products, sold products, know how to empathize with the ups and downs of building early stage businesses. And that's the core team that we have today. And I think it was even slightly bigger at the time we last spoke over there.
I did not realize that
Yeah.
was smaller. Well, one thing I just, and this is maybe a silly question, but whether investing in AI changes anything. Like if there's more you can do with less, or if you actually need more people chasing after these AI researchers who keep leaving, Google and Meta, et cetera.
Yeah, I think AI is it's incredible to have this tidal wave of technology innovation in my lifetime. I moved to the Valley in 1997 when we were in the middle of the internet boom, and to be able to live another boom like this twice in your lifetime feels like a dream. So I think there's no better time to be alive than today and to invest in startups because, to your point, there's going to be a step function change in how we all get to live and experience life as well as how we work, because the step function change will come in the form of productivity that we will all gain through AI. And I think we're already seeing that in the kinds of businesses that we're backing in whether it's like in legal or in healthcare or for software developers, how AI is really supercharging what we would say is the highest paid type of employees that are out there. They get to do more with less time and get to write more software, get to focus on their patient experience, get to do legal work that would have required lots of like clerks and paralegals, et cetera. So I think we're seeing all of that sort of really come to fruition right now, and we've got a long way ahead of the productivity gains we'll see through AI.
I wonder if this is an obvious question, but again, I've been kidding tonight about all these people coming out of these big companies, but I am wondering how it works, and if you are going into, I know like in recent years it was very common. People were reaching into companies and saying, I will stake you if you get out of there. Is that happening, and have you done that by research team?
I mean, I think that's definitely happening, but the pull of AI, the wow factor, I think has actually pulled folks out of these companies themselves. I mean, some of the ideas, whether it's building a great product that supercharges engineers, or building, finally being able to transform healthcare, because a lot of these tools are becoming more useful and data is becoming more accessible. These opportunities are becoming much more obvious and much more accessible, and so actually you do see lots of kind of the first wave. You saw a lot of folks try to come out and start these companies, and the big thing for us was really trying to understand, are they really the folks who know how to do this, right? And so, obviously we rely on our founders for that. We look for kind of that pedigree, the folks who know how these things work. And I think now there is a little bit of a sort of a scarcity of AI talent, and you're seeing incredible salaries, you're seeing incredible opportunities for folks both in big companies but also in startups. And I think if you think back to the last 10 years in venture, there are these waves where technical talent just becomes like the scarcest resource, right? And I think we're seeing that right now. But usually that markets are efficient, so people become more proficient at it. The tools, the platform companies they're putting out are becoming much better. And that's all, in our view, an incredible catalyst for venture investing over the next decade or more, because these things are truly transformational.
I talked to Aiden Felicis about this a little bit, and I said, how do you get talent in this market? And he said, a lot of it has to do with the mission of the company, which is great, but it's pretty hard when Meta and OpenAI and Google are offering you multi-million-dollar packages. So how are your portfolio companies countering it? I mean, like you said, there's tools that are helping everybody scale, but
we talked about some companies. We have companies that, like Harvey, are transforming the legal profession. We have companies like Ambience that are transforming healthcare. We have companies that are transforming, doing like Viz that are doing automated stroke detection and medical diagnostics. The mission part of that definitely resonates with the people who are joining those companies, right? That's a huge component, because you get to work on AI, but you also get to work on something that truly impacts the world. That's the first thing. The second thing is a lot of these companies, you have the platform companies that are building a lot of phenomenal infrastructure, but when you get into real world use cases, and we have a company called Infinitus that's automating healthcare, voice conversations in healthcare, and once you go down into that sort of niche, which turns out to be really big over time, you realize that you need to tweak the models, you need to potentially build your own models, you need to build your own potentially infrastructure. And that becomes a really interesting technical challenge, which is also incredibly attractive. And you can sort of see both the personal growth, the technical upside, but also eventually the outcome upside of being in one of these companies versus a platform company. But there's probably no better time to be an AI engineer than today, right? And it's exciting for us too.
And we talked, and you mentioned that you actually incubated or helped incubate one company that's sort of a hot ticket in your portfolio, Glean. And that was with Arvind Jain, who is a repeat founder. So maybe tell me a little bit about how that came to pass, and if that's something that we'll see you do again.
Yeah, so one of the ways we invest, or all of us have a major and a minor, and actually both of us happen to have a major in sort of productivity collaboration software. And one of the areas that we've been exploring for many years is enterprise search, an area that has many, we call it a graveyard of startups. it's just not worked. And but the notion of an enterprise search company when this is back in 2019 when the cloud was not pervasive. Most of our knowledge inside of a company was inside of cloud-based applications. What if you could search across this corpus of knowledge that was embedded in all these cloud applications, which was the premise of Glean when it was started back in 2019. So we met Arvind, and we sort of immediately knew that we wanted to back him to go after this idea. Arvind, before starting a company called Rubrik, he was at Google, where he was a distinguished engineer, just a really brilliant computer scientist. And so, we happened to have some space at 2750 Sand Hill Road, and Arvind hired his first few engineers there, and it got up to about 15 people before the pandemic actually hit, and they had to all go home and build from there. But that sort of is, I would say, we had a prepared mind. We met the right founder to go build this company, and now it's doing incredibly well. And then there's also been the tailwinds of LLMs and AI, and they're beyond search. Also now an enterprise AI assistant that does all kinds of complex things, workflows beyond just searching the company's knowledge or the company's brain. Yeah.
I was just going to say, so Glean now is worth valued. I think it's valued at $2 billion. Rubrik, I think, is valued at like a little over $3 billion, and it's a much older company. Yeah. Which begs the question, which I asked Felice as well, but about valuations. I'm just worried about us seeing we saw Hopin and Bird, and a lot of things got hot really quickly, and then only had one direction to move in. Are you worried at all about these valuations and these companies having to kind of increase these thresholds? I mean, it is a fairly young company.
Yeah, at the end of the day, valuations are imperfect science and art, whatever you want to call it. But at the end of the day, you're valued based on your revenues and your profits. And we all know now from seeing the last batch of companies like from 5 years ago that were not public, be public and be valued based on multiples of revenue and profits. And that's the eventuality of life. And so, but some of these companies we're talking about, they are exciting in terms of like the revenue growth is like you haven't seen before, and they're doing things that are really hard, and they're defensible. They're built moats, and they're becoming or have become the category leader in what seems like an obvious winning area where the market's large and you can create a $1 billion revenue business. And I think a company like Glean falls in that category.
I think for somebody who's a little bit outside that world, as I am, it's hard to sort of understand the moats. I guess the pieces seem like they're moving around so fast. So I think how strong is that moat? Maybe how do you think about that? I mean,
well, I think it depends, strongly on the company. In generally, moats and total markets are probably the most difficult thing to figure out when you're an investor. That's the thing you typically get wrong the most. And one thing we've learned over our history is that we always undervalue our biggest winners. The companies that do the best always grow faster. They create or expand their market much more than anybody could have anticipated. So we look for some intangibles. We do look for some things that matter. Obviously, one of them is just incredible engagement from customers. Like when the product becomes a verb, when it's part of your daily use case, that is really hard to tear out. Even if there is maybe a copy that's not as good, that's fast followed or being put in from the top, the brand and the quality of experience matters quite a bit. We're in a company called Loom, which did a phenomenal job of implementing AI, which was just acquired by Atlassian for around just under $1 billion. And Loom became a verb, right? People were looming, and that was part of their moat. The more obvious moats, in many ways, are kind of the piece of the market that you're in. And so if you look at a lot of the companies that we're backing, especially in the AI wave, they're taking a big problem space that a company can and should own, right? Enterprise Assistant is a big space. The people who figure that out first, and especially in AI, are going to be the people who move the fastest. Because if you look at AI, unless you've built an incredible product that's just flying itself off the shelves, you don't actually get distribution for free the way you did with mobile, right? You built a mobile app, you got distribution. AI requires distribution and requires data to improve the product experience. And so the first movers that define a category of the product, in our view, can actually run much faster than anyone else. Or you start in a category that is kind of a big niche, right? And Harvey, which is a company we backed that's doing an AI-powered lawyer, is building AI for lawyers. There might be other folks who try to get into that space, but it's pretty defensible, right? Once you've built the product for lawyers, lawyers have word of mouth, lawyers work with other lawyers, lawyers work with all sorts of clients, and you can create that defensibility. So it's something that we think about, but it's always really hard to analyze. But when you see it, you kind of know it.
Right, like with Harvey, I would think not defensible, but you're saying the quality of the data has made it more so.
Well, I think it's incredibly defensible because once you've built the standard for how lawyers engage with each other, right, the way they communicate on documents and the way they exchange documents, the way they work with companies on those same documents, the way those companies work with other lawyers or vendors or auditors, you're creating this connected network of people who've been standardized on your product. The reason for them to do that has to come from the quality of the experience that you've created for them, right? The quality of the AI, the way that you enhance their workflow, how much time you save to them. So it starts with this kind of nugget of, is this a really great product that I'm living in every day as a lawyer? But then the growth and that network and the connectivity that creates the moat is actually, I think, pretty straightforward.
Can I ask, how many AI pitches are you guys seeing on a weekly or monthly basis?
Maybe just from a percentage standpoint, I would say more than 80%.
Is that right?
Yeah. Are companies that are utilizing AI. And it is, just to be fair, like, if you were in 1996 building a company and you didn't mention the internet, so you'd be out of your mind, right? And so in the same vein, I think not mentioning AI or actually utilizing it would be a missed opportunity.
Right. And I do see your names popping up pretty frequently. I'm wondering how many deals are you doing in this realm, if we can call it that?
Yeah, actually, if you looked at Q1 to Q3 for us last year, it would have been the slowest year we've had in like 13, 14, 15 years, a long time. And then Q4, things picked up. And so I would just say, we're always, looking at the best opportunities, and we never feel the pressure to invest, but December was a good month.
Yeah.
Well, one of the sort of buzzy companies that I've seen you were attached to is called Together. Can you tell me a little bit about that and why that's interesting?
Yeah, I mean, we're investors in Together. It's building a platform and set of services for people who want to run their own models. So it's a bit of, in some ways, an orthogonal bet to sort of the oligopoly that I think you were chatting with in the last interview of folks who will provide infrastructure. But it's a company with incredible customers, like really strong growth, phenomenal team. It's sort of a company where the numbers speak for themselves. And we do think that there's, again, colored by our experience with some of the companies we've backed who are building vertical experiences. Again, healthcare, legal, software engineering, science, these kinds of verticals. There will be fine-tuning and sort of own modeling that may be required for some of these use cases, at least in some mid to kind of near term. And so that opportunity is actually quite exciting because of that.
And I understand that you have invested in a wearable started by somebody who would make VCs salivate. Tell us more.
I'm not sure I can tell you more today. How about next time?
Today would be better.
I don't think they would like that.
No.
Yeah.
Okay, can I ask you, in the future, are we going to, what's the most sort of compelling pitch that the founder has presented to you? I mean, so we've got Glean AI, we've got, the Rabbit R1. I'm just wondering, are we going to, we carry one thing around now, our phone. How many devices or wearables are we going to be sort of, involved with?
I think we all ask ourselves the question, what is the computing platform beyond the mobile phone? And if you look on our bodies, what's the last thing we've adopted? Some people have put on Oura rings, some have put on Fitbits, and I'm wearing a Whoop. So, but these are, I would say, pretty basic wearables. They're not all that smart. But I think what's capturing the imagination for all of us is what is the next computing wearable that we're all going to adopt that doesn't look like a cell phone. And there's the Rabbit, as you saw the Humane Pin. Soon you'll see the Vision Pro. So there's exciting stuff happening, but as you know, consumer hardware is very difficult to get consumers to adopt a new form factor and a new way of doing things that is different from what they were used to doing. Takes some incredible design and a low-cost product and beautiful interfaces, and I think we're excited to see all these things. We get to see them and decide whether we're investing in them or not.
Great. Well, I'm excited to hear first
Yeah.
when you share more information about this startup. Guys, I have to let you go, but I did want to also ask you quickly about Figma. I had meant to talk to you sooner about this, and time got away from me, but I was so sad, candidly, for the company. I guess you led the Series B in 2018. 2022, Adobe announces it's going to buy this company for $20 billion. Amazing. And then, of course, everything happened after that. And then in December of this past year, it said it's too complicated, it's not happening. And then, it was reported yesterday that the company has readjusted its valuation from $20 to $10 billion, and it's giving employees more equity to sort of, motivate them to stay. I'm just wondering, how big a setback is that for Figma? Where does the company go from here?
Yeah, Figma is one of those once-in-a-decade kind of companies, but both from the team, the product they've built, the love from its community, the revenue profile, the profitability. It is the venture dream, the venture capitalist dream. Not so sad that it's charted its own independent course and being an independent company. And it was quite bittersweet to agree to sell the company for everyone around the table at the time in September of 2022. So I think we're very energized about the future because the company continues to just perform incredibly well.
That's great. Well, guys, thank you so much for joining us.
Thank you, Connie.
Such
Thank
a
you.
treat.
Let's do it.
Thank you,
And
everyone.
thank you, everybody who came, and really appreciate it. We have some drinks and some dessert, so hang out, have another cocktail, and we'll see you next time.